Morning, folks, and thought I'd do a quick video this morning for our channel and for our social media platforms to just briefly talk about the winter economy plan that the Chancellor announced yesterday in response to the additional COVID safety measures and restrictions that are being put in place by the government for the coming months. Government are saying that these types of restrictions may now be in place for a 6-month period due to the increase, obviously, in the numbers and the spread of the infection. And they're obviously trying to alleviate now more pressure that's going to be on the economy. And they're well aware, I would imagine, that there's going to be a massive pressure on the NHS over the winter months as well, as we have the flu season and so on. So yesterday's announcements were certainly welcome and not unexpected. And a couple of the measures actually were it was quite a relief to see the measures put in place in relation to self-assessment taxes and VAT, because I think everybody can predict quite easily that the measures originally put in place to defer VAT payments between March and kind of May this year and move them to being due to be paid by March next year was fine, but it was essentially just moving debt into the future. The same applies then to the self-assessment. Anyone who had to make a payment in July this year won't have had to make that payment, but the payment they will have had to make in January coming now in 2021 is going to be a lot more. So potentially everyone was predicting, and certainly I was quite vocal on it and saying, like, the first 3 to 6 months of next year was going to be massive pressure on small business. From their cash flow perspective, there was going to be doubling up of certain, ongoing bills. Also bearing in mind the fact that anyone who took a bounce back loan will need to start repaying that 12 months after receipt of the loan. So some announcements yesterday covered that as well. So I'm going to talk about briefly now the main announcements that were talked about, and the main announcement obviously was to do with supporting the economy from the point of view of trying to protect jobs and supporting businesses to keep people on their payroll. And they announced yesterday the new jobs support scheme, which essentially is going to replace the job retention scheme, which is due to end at the end of October. So the ability to furlough workers ends at the end of October. And the new job support scheme kicks in from the 1st of November. It's going to run for apparently a 6-month period. So the way that kind of works then is that it's designed to encourage employers to keep their staff on and to employ them actively for at least 1/3 of their normal hours. On that basis, the lost hours will then be split between the employer paying part, the government paying part, and the employee losing part of their wages. The whole scheme is designed to make sure that an employee can get, I think, at least 77% of their normal wages, even if they're only working 1/3 of their normal hours. Okay, so a very, very brief example, and it's a little bit faded because I've had to kind of do it sort of round the other way. But let's say, for example, somebody is earning £300 a week normally for 36 hours. Okay, so that's their normal standard contracted hours and their contracted pay. So what happens under the job support scheme is that employee must be actively employed to work in the business for at least 12 hours a week. So they have to be working 1/3 of their normal hours. Assuming, in this example, that this employee works 12 hours, then the employer will pay them £100 for those 12 hours. That's 1/3 of what they normally get, which means there's 24 lost hours. Okay. Those lost hours are then split 1/3, 1/3, 1/3 between the employer, the government, and the employee. So there's 8 hours the employer will pay, another £67. The government will fund another £67, and the employee will lose £67. So as you can see, the employee just loses this bottom bit. I would imagine that this part being funded by government will possibly need to be paid by employer and reclaimed, so there could be cash flow implications there, and the employer pays this part. So that's the general thrust of the scheme. I'm sure there's going to be finer details with these things as we move forward in the next couple of weeks. One of the main drawbacks that has been voiced already about the scheme is that there's more cost now on the employer. If you employ someone for a third of their normal hours, you will pay them for those hours, but you're expected to also top that up by a certain amount in order to be able to get the government to top up by another amount, which could be difficult for certain small businesses in certain sectors. There's no doubt about it. But as it stands, that's the thrust of the scheme. A couple of the other announcements that were made yesterday. Anyone who did avail of the original coronavirus business interruption loans now been extended up to 10 years for repayments, and there will be a new successor loan guarantee programme to be announced in January in relation to those. But the main one that most small businesses that I'm aware of would have availed of would have been the bounce back loan. And the bounce back loans now been extended in terms of repayment terms from 6 to 10 years if the business wants to do that. So that's a pay as you grow scheme is what it's been known as, and businesses can move their bounce back loan to interest only payments or suspend repayments for 6 months if they feel the business is in real trouble. And also a guarantee that credit ratings for the business wouldn't be affected. So a lot of finer detail needed, I think, along those in that particular area to see what that entails. Two main other things to talk about, which directly affects a number of our clients, quite a lot actually. So the self-assessment payments that I've just been talking about, that were being deferred from July and being paid now in January, meaning that quite a lot of businesses would have more self-assessment tax to pay because they've less paid on account. Now it's the case that those self-assessment tax debts, up to 30 grand of self-assessment tax debt, can be set up over a 12-month payment plan from January up to January 2022. The only drawback in that is the usual one, which is you have to contact HMRC directly to get that payment plan in place. And as we know from experience, they are massively under-resourced. They are massively under pressure. So in order to do that, you'll need to get on the phone, and you'll probably have to hang for a while, in fairness. But not a bad measure to be introduced, and takes a lot of pressure off people in the post-Christmas period. In terms of VAT, then, they have announced that the temporary reduction of VAT for the hospitality sectors, which was brought down from 20% to 5%, that was due to end, I think, at the end of January. So they've extended that 5% VAT rate for hospitality up to the end of March, which is good news for the hospitality sector, who are going to find it, I think, extremely tough now in the winter months with the new restrictions in place. But a biggie that I could see as well was in relation to the deferred VAT payments. So anyone who deferred their VAT payment between March and May, which we actually did at Cloud 360, then they no longer have to pay that as a lump sum by the 31st of March 2021. And there will be an option of splitting it into smaller interest-free payments over a period of 11 months. That is very welcome news. I know for ourselves, we deferred our own VAT payment. We've actually set some money aside to cover that, or just building that, and have it with the aim of having the lump sum payment by March. But and we'll probably continue with that anyway. But it's good to see that if other businesses have found it tough trading for the last number of months, and the winter doesn't improve, then having to face a very big VAT bill, and potentially, obviously, you're going to be facing, if you have a VAT bill to pay in March, you might have another payment to make for your normal quarterly VAT in February, March or April time, so you would have double VAT bills coming. So it's good to see that one can be sort of stretched out a bit further as well. I think that's a very welcome announcement. That essentially covers the main thrust of what the Chancellor spoke about yesterday. As always, these things will have a lot of finer detail behind it. No, bear in mind, there is one other thing I did forget to mention there. The self-employed income support scheme has been extended as well. So there will be a third and fourth grant payment, as there was back in sort of March, April time, and then there was more in, wasn't it, sort of August, September time. So there's going to be a third and fourth payment in those, but it's going to be a massively reduced amount. I think instead of the 80% and then the 70%, I think it might be as low now as 20%, if I read that correctly. So it has been extended, but the amount of cash that's going to be available for those grants for the third payment and fourth payment are going to be massively reduced. And again, it'll be a matter of applying through your online portal with HMRC or getting on the phone and holding again. So that's another thing that was announced yesterday. So as I say, with every of one of these, the devil will be in the detail. We're waiting for more details to come out in terms of exactly how you apply for some of these things, exactly what the mechanisms are, what the timing of all these things are as well, and we will update everyone as quickly as possible when we find out some of the finer detail. As for now, folks, stay safe. Focus on what your business can do. Talk to us if you want to sit down and do some planning along the lines of where your business is going to be in the next 6 to 12 to 18 months. We can step in, help you do a one-page business plan to get you through this period. We can, check in with you on a monthly and quarterly basis if you'd like us to do that. And we can help you essentially get a cash flow plan in place, which is going to be vital, especially with all these measures and various VAT and tax bills being deferred. Getting a cash flow down now, folks, on terms of how all this money is going to be paid and what money you need to bring in to make sure it's being paid, then that's going to be essential. So if you need any help with any of that, please do contact us. As always, we'd be more than happy to help.